What if I told you some of the biggest wealth-building opportunities of the next decade are hiding in plain sight, in a sector that's changing lives? Today I've got 3 powerhouse stocks for August 2025 you need to know about. These aren't random picks. These companies are reshaping the future of medicine and health. We'll break down a global pharma leader, a biopharma innovator tackling rare diseases, and a biotech giant expanding its monopoly into new, lucrative areas. This isn't just another stock video. This is a deep dive into companies that could define the next wave of market growth. The information I'm about to share could be a game changer for your portfolio, so pay close attention. Hit like, share your thoughts in the comments, and subscribe so you don't miss the next big investing update. Let's kick things off with Eli Lilly, ticker LLY, a pharmaceutical titan that's redefined what's possible for large-cap healthcare stocks. Founded over 145 years ago, Eli Lilly has evolved from a small family-run business into a global powerhouse, consistently ranking among the world's most valuable and innovative drug makers. Their legacy is built on a relentless pursuit of medical breakthroughs and a commitment to improving lives on a massive scale. Their meteoric rise is all about innovation and flawless execution, especially in diabetes and obesity, 2 global health crises that affect hundreds of millions of people. Eli Lilly's research teams are at the forefront, developing therapies that not only treat symptoms but also address the root causes of these conditions. Their work is transforming the standard of care and offering hope to patients worldwide. Blockbuster drugs like Mounjaro and Zepbound aren't just bestsellers, they're cultural phenomena, driving record-breaking revenue and profit growth. These medications have become household names, celebrated for their effectiveness in managing diabetes and obesity. The demand has been so overwhelming that supply shortages have made headlines, underscoring just how essential these drugs have become in the fight against chronic disease. But Eli Lilly isn't a one-trick pony. Their R&D engine is churning out a deep pipeline targeting Alzheimer's, autoimmune disorders, and cancer. The company invests billions each year into research, fueling a steady stream of new drug candidates. This robust pipeline means that Eli Lilly is always on the cusp of the next big breakthrough, ensuring long-term growth and relevance in a rapidly changing industry. Even a fraction of success from these new drugs could be a massive catalyst for the stock. Each approval has the potential to open up new multi-billion-dollar markets, and with several late-stage candidates in the works, investors are watching closely. The anticipation around upcoming clinical trial results keeps Eli Lilly in the spotlight and adds to its growth story. Financially, the numbers are staggering. Double-digit revenue growth, soaring profits, and a stock that's crushed the S&P 500. Over the past 5 years, Eli Lilly's share price has outperformed nearly every major index, rewarding shareholders with exceptional returns. Their financial discipline, combined with strategic investments, has created a virtuous cycle of growth and reinvestment. Some worry about the high valuation, but with this level of innovation and market dominance, a premium is justified. The company's ability to consistently deliver new products and expand its market share supports its lofty price-to-earnings ratio. For many investors, Eli Lilly's premium valuation is a reflection of its future potential, not just its current performance. The addressable market for obesity and diabetes alone is in the hundreds of billions, and Eli Lilly is perfectly positioned to capture a huge share. As global rates of these conditions continue to rise, the demand for effective treatments is only going to increase. Eli Lilly's leadership in these therapeutic areas gives it a powerful advantage both in the US and internationally. Their management team has scaled production to meet overwhelming demand and built global brands with powerful moats. By investing in advanced manufacturing and supply chain logistics, they've ensured that their life-changing medicines reach patients around the world. The company's leadership is widely respected for its vision, operational excellence, and ability to navigate complex regulatory environments. Clinical data often shows their drugs outperforming competitors, giving them a significant edge. This scientific rigor and commitment to quality have earned Eli Lilly the trust of physicians, patients, and regulators alike. Their ability to deliver superior outcomes is a key reason why their products command premium pricing and strong market share. Looking ahead, Eli Lilly is expanding globally, diversifying revenue, and reinvesting billions into R&D for the next wave of innovation. The company is entering new markets, forging strategic partnerships, and leveraging technology to accelerate drug discovery. This global expansion not only boosts revenue, but also spreads risk across multiple geographies and therapeutic areas. They're also working on new formulations and delivery methods, which could extend patent life and drive further growth. Innovations like once-weekly injections, oral formulations, and smart drug delivery devices are in development, aiming to improve patient adherence and outcomes. These advancements could set new industry standards and further solidify Eli Lilly's leadership. Their Alzheimer's candidate, donanemab, could be a game-changer, but even without it, their core business is rock solid. The potential approval of donanemab would open up a massive new market, addressing one of the most challenging diseases of our time. Yet, even if this drug faces setbacks, Eli Lilly's diversified portfolio ensures continued growth and resilience. Eli Lilly boasts a massive market cap of nearly $627 billion. The company posted earnings per share of $15.33, with a price-to-earnings ratio of about 45.5. In 2024, Eli Lilly reported revenue of $45 billion, while net income came in at just over $10.5 million. Currently the stock trades around $698, which is nearly 18% below its fair value estimate of $823. This gap suggests that, despite its strong valuation metrics and scale, the stock may still have room to grow. For long-term investors, Eli Lilly is a blue-chip growth stock with a robust pipeline and a proven track record. The company's consistent performance, strong balance sheet, and commitment to shareholder returns make it a cornerstone holding in any diversified portfolio. Whether you're seeking growth, stability, or exposure to healthcare innovation, Eli Lilly delivers on all fronts. Don't let the high price scare you. Focus on the booming business and the company's profound impact on global health. Eli Lilly's therapies are improving quality of life for millions, reducing healthcare costs, and setting new standards for what's possible in medicine. Their influence extends far beyond the balance sheet, shaping the future of healthcare for generations to come. This is a name you want to own for the long haul. With a history of weathering economic cycles and emerging stronger, Eli Lilly offers both growth and resilience. It's the kind of stock that can anchor your portfolio through market ups and downs. Eli Lilly is not just making money, they're changing lives and building a pharmaceutical dynasty. Their mission-driven culture, focus on patient outcomes, and relentless innovation set them apart in a crowded industry. Every new therapy is a testament to their dedication to making the world healthier. It's a core holding for any serious investor. Whether you're a growth seeker, a value investor, or someone who wants to make a positive impact, Eli Lilly checks all the boxes. Their story is one of vision, execution, and lasting value. The journey of growth is far from over. With a world-class team, a powerful pipeline, and a mission to transform healthcare, Eli Lilly is poised to lead the industry for decades to come. Our second pick is a high-risk, high-reward play, Summit Therapeutics, ticker SMMT. This is a clinical-stage biopharma company that's flying under the radar for many investors, but it has explosive potential that could put it on the map in a big way. Summit is not your typical biotech. It's a company with a bold vision, aiming to disrupt the cancer treatment landscape with a truly innovative approach. At the heart of Summit's story is 𝗣𝗟𝗏𝗡𝗑, a first-in-class bispecific antibody. What makes 𝗣𝗟𝗏𝗡𝗧 so special is its ability to target two critical cancer pathways at once, VEGF and PD-1. This dual-targeting mechanism is designed to attack tumors from two angles, potentially making it much more effective than traditional single-target therapies. This one-two punch approach could translate into better efficacy and fewer side effects for patients, especially those battling non-small cell lung cancer. Non-small cell lung cancer is one of the most common and deadly forms of cancer, and the market for effective treatments is massive, worth tens of billions of dollars globally. The need for new, more effective therapies is urgent, and 𝗣𝗟𝗏𝗡𝗧 could be a game-changer if it lives up to its promise. Summit didn't develop 𝗣𝗟𝗏𝗡𝗧 alone. They licensed it from Akeso, a leading Chinese biotech company. Akeso's clinical trials in China have already produced impressive results, with 𝗣𝗟𝗏𝗡𝗧 outperforming Merck's blockbuster drug 𝗗𝗑𝗓 in head-to-head studies. This is no small feat. 𝗗𝗑𝗓 is one of the most successful cancer drugs ever, so beating it in trials is a major validation of Summit's approach. Now all eyes are on Summit's ongoing clinical trials in the US and Europe. If these trials confirm the results seen in China, the impact on Summit stock could be dramatic. We're talking about the potential for a biotech moonshot, where positive data could send shares soaring, possibly doubling or tripling overnight as investors rush in. Of course, it's important to remember that this is a speculative bet. Clinical trials are inherently risky, and there's always the possibility that results won't meet expectations. Negative data could send the stock tumbling just as quickly as positive news could send it higher. That's the nature of biotech investing, high risk but also high potential reward. What gives Summit an edge, though, is the leadership of Robert Dugan. Dugan is a biotech legend, best known for his role in turning Pharmaceuticals into a multi-billion-dollar success story. He's not just the CEO, he's also heavily invested in Summit with his own money, signaling strong confidence in the company's future. Dugan's track record and hands-on involvement make this a calculated risk, not just a shot in the dark. Like many clinical-stage biotechs, Summit is pre-revenue and burning through cash as it funds its research and development. But thanks to Dugan's backing and a series of successful fundraising rounds, the company has a clear financial runway to reach its next major milestones. This financial stability is crucial. giving Summit the resources it needs to see its trials through to completion. The next big catalyst for Summit is expected by August 2025, when pivotal trial data is set to be released. This is the moment investors are waiting for. Any positive news could act as a huge catalyst, drawing attention from Wall Street and potentially triggering a major re-rating of the stock. But the story doesn't end with lung cancer. Ivonescimab's unique mechanism of action could open the door to treating a range of other cancers as well. If the drug proves effective in multiple indications, it could become a multi-billion-dollar platform, much like how 𝗗𝗜𝗦𝗧 expanded from one cancer type to many. This is what investors call a pipeline in a product story. Just as 𝗗𝗜𝗦𝗧 started in one indication and grew into a franchise spanning dozens of cancer types, ivonescimab could follow a similar path. The potential for label expansion is enormous, and each new indication adds to the drug's value and Summit's growth prospects. For investors, SMMT is a classic speculative play. It belongs in the high-risk, high-reward section of your portfolio. Only allocate what you're truly willing to lose, but keep in mind that the upside could be massive if things go right. This is not a stock for the faint of heart, but for those who can stomach the volatility, the potential rewards are hard to ignore. If the clinical data is positive, SMMT could see its stock price double, triple, or even more in a very short period. On the flip side, disappointing results could see the stock cut in half, or worse. That's the reality of investing in early-stage biotech, big swings in both directions. Summit Therapeutics carries a market capitalization of roughly $19.5 billion, but is still operating at a loss, with a net income of negative $221 million. Investors will be closely watching how the company executes going forward as it works to turn its research and development efforts into profitability. For those with an appetite for risk and a belief in the power of medical innovation, Summit offers one of the most compelling and exciting stories in biotech right now. The combination of cutting-edge science, a huge unmet medical need, and a proven leadership team makes this a stock worth watching closely. A best-in-class drug candidate, a massive addressable market, and a CEO with a track record of delivering outsized returns. These are the ingredients for an asymmetric bet that could transform your portfolio if the stars align. If ivonescimab succeeds and becomes the new standard of care, Summit Therapeutics won't be a small cap for long. The company could quickly grow into a major player in the pharmaceutical industry, attracting attention from big pharma and institutional investors alike. This is a story of relentless innovation, bold leadership, and a huge market opportunity waiting to be seized. Summit is pushing the boundaries of what's possible in cancer treatment, and the next year could be pivotal for its future. As always, it's essential to do your own due diligence. Biotech investing is not for everyone, and the risks are real. Make sure you understand the science, the competitive landscape, and the financials before making any investment decisions. Summit Therapeutics is a pioneer on the verge of a potential breakthrough. The company's work could change the lives of patients and investors alike, but the outcome is far from certain. As we head into 2025, SMMT is a stock to watch very closely. The next set of clinical results could be a make-or-break moment for the company and its investors. High risk, high reward. This is the kind of opportunity that, while risky, has the potential to be truly life-changing for those who get in early and see it through. Keep Summit Therapeutics on your radar. The next chapter in this story is about to unfold, and it could be one of the most exciting in biotech this year. Our final pick is Vertex Pharmaceuticals, ticker VRTX, a company that stands at the intersection of stability and innovation. Vertex is a rare breed in the biotech world. It has the financial strength and market dominance of an established giant, yet it continues to operate with the hunger and creativity of a disruptor. This unique combination makes Vertex not just a survivor in the competitive pharmaceutical landscape, but a true leader poised for the next wave of medical breakthroughs. Vertex dominates cystic fibrosis (CF) treatment, turning a once-fatal disease into a manageable, chronic condition for tens of thousands of patients worldwide. Their CFTR modulators, especially the blockbuster Trikafta, have revolutionized care and dramatically improved life expectancy and quality of life for people with CF. For many families, Vertex's therapies have been nothing short of life-changing, offering hope where there was once only uncertainty. This near monopoly in CF has created a fire hose of high-margin, predictable cash flow and a powerful economic moat. With little direct competition and a deep understanding of the disease, Vertex has built a fortress around its core business. This financial engine not only funds ongoing operations but also provides the resources to invest aggressively in new science and future therapies. But Vertex isn't content to rest on its laurels. The company is channeling its CF windfall into bold strategic moves that could redefine its future. Management is laser-focused on expanding beyond CF, targeting new therapeutic areas with the potential to transform patient care and drive the next phase of growth. Their vision is clear. to build a diversified portfolio that can deliver sustainable value for decades. One of Vertex's most exciting near-term opportunities is a non-opioid pain medication, a potential blockbuster in a market desperate for safer, more effective pain relief. Chronic pain affects millions, and the opioid crisis has left a huge unmet need for alternatives that don't carry the risk of addiction. Vertex's candidate could be a game-changer, offering hope to patients and families while opening up a multi-billion-dollar market. Early clinical data for this pain therapy is very promising, showing both efficacy and safety. If approved, it could quickly become a new growth engine for Vertex, potentially even eclipsing the success of their CF franchise. The company's ability to execute in clinical development and navigate regulatory hurdles gives them a real shot at capturing this massive opportunity. Vertex is also a pioneer in gene editing, having partnered with CRISPR Therapeutics to launch 𝗗𝗑𝗦, the world's first approved CRISPR-based therapy. 𝗗𝗑𝗦 targets sickle cell disease and beta thalassemia, two devastating genetic blood disorders that previously had limited treatment options. This collaboration puts Vertex at the forefront of a new era in medicine, where editing genes can offer cures rather than just symptom management. The approval of 𝗗𝗑𝗦 is more than just a commercial win, it's a validation of Vertex's scientific platform, and a signal to the world that genetic medicine is here to stay. This breakthrough opens up entirely new markets and therapeutic possibilities, positioning Vertex as a leader in the rapidly evolving field of gene editing. Vertex's pipeline is impressively diversified with multiple shots on goal across pain, gene editing, type 1 diabetes, and rare kidney diseases. Each of these programs has the potential to be a major value driver, and together they create a robust foundation for long-term growth. The company's research teams are pushing the boundaries of what's possible, exploring new frontiers in medicine that could benefit millions. Financially, Vertex is in a league of its own. The company boasts a fortress balance sheet, consistent profits, and massive free cash flow. This financial strength allows Vertex to invest heavily in research and development, pursue strategic acquisitions, and weather any storms that may hit the biotech sector. Investors can take comfort in the company's disciplined approach to capital allocation and its unwavering commitment to long-term value creation. Vertex Pharmaceuticals is valued at about $100 billion. Vertex reported earnings per share of $14.14, paired with a P/E ratio of 27.6. For 2024, revenue reached $11 billion, but the company posted a net income loss of over $535 million. Despite the revenue strength, the bottom line highlights the financial challenges Vertex faces as it continues to invest heavily in its drug pipeline. With Vertex, you get a stable, cash-generating core business plus call options on multiple blockbuster innovations, all at a valuation that remains reasonable compared to its growth prospects. It's a rare combination: downside protection from the CF franchise and significant upside from the pipeline. By August 2025, Vertex could be launching its pain drug and rolling out 𝗗𝗑𝗦 to more patients, with additional pipeline catalysts on the horizon. The next 18 months are packed with potential milestones, each one a chance to unlock new value for shareholders and patients alike. Management has a proven track record of turning complex science into commercial success. Their disciplined execution, strategic vision, and ability to attract top scientific talent have set Vertex apart from its peers. The leadership team's focus on both innovation and operational excellence is a key reason for the company's sustained outperformance. Their move into type 1 diabetes, where they're working on a potential cure rather than just another treatment, is another huge opportunity. If successful, this program could change the lives of millions and open up a massive new market for Vertex, further diversifying its revenue streams. Vertex is a rare blend, a dominant, profitable franchise with the agility and ambition of a startup. The company's culture encourages risk-taking and innovation, empowering teams to pursue bold ideas that could shape the future of medicine. They're not afraid to take risks and invest in groundbreaking science, even when the path forward is uncertain. This willingness to bet on transformative technologies is what keeps Vertex ahead of the curve and ensures a steady stream of new opportunities. This relentless commitment to innovation will keep driving growth and value for years to come. As the healthcare landscape evolves, Vertex is well positioned to adapt, lead, and deliver for both patients and investors. For growth-oriented investors, Vertex is a core holding, a company that offers both stability and the potential for outsized returns. Its track record, pipeline, and financial strength make it a compelling choice for anyone looking to invest in the future of medicine. Vertex is not just a leader today, it's actively building the future of medicine. The company's innovations are setting new standards in patient care and redefining what's possible in biotechnology. The combination of their CF dominance and high-potential pipeline makes VRTX a top pick for 2025 and beyond. Few companies can match Vertex's blend of proven success and future promise. It's a biotech giant with a very bright future. Don't overlook this one. Vertex is quietly shaping the next era of healthcare innovation. Vertex is built for the long run, with the vision, resources, and drive to keep leading the industry for years to come. There you have it. Eli Lilly, Summit Therapeutics, and Vertex Pharmaceuticals, 3 unique, high-growth opportunities for August 2025 and beyond. Each offers a different way to play the healthcare innovation boom, whether you want stability, explosive upside, or a blend of both. If you're ready to level up your investing, check out my Value Stocks Investing Master Course, link in the description. Want exclusive stock tips and in-depth analysis? Join the Stocks Galore Patreon community, details below. Now, which of these 3 stocks excites you most, or is there another high-growth healthcare name on your radar? Let me know in the comments. Don't forget to like, share, and subscribe for more top investing ideas. Thanks for watching. See you in the next one.